Okay, it looks like we have just about everybody with us this morning. I'm Gina Sudam. I'm the president of the Wyoming County Chamber of Commerce, and welcome to our Restart, Rebound, Rebuild series. Today we're talking about PPP and the new flexibility legislation, and also cash management and how to rebound your reserves. This is the last session in the segment of our rebound segment, and we will start rebuild on Monday. So we're excited for that. Thank you all again for joining us. And our speakers this morning are Matt Schaefer and Alex Halper. Matt Schaefer is a board member at the Wyoming County Chamber of Commerce, and Alex Halper is with the PA Chamber in Harrisburg. So thank you both for joining us this morning. We have, first of all, let's just dig right in and get started because there's a lot to talk about with this legislation. So the legislation, for those of you who don't know, it's HR 7010. Let's talk about what that does. It's labeled as flexibility for the Paycheck Protection Program. And it has passed both the House and the Senate, correct? And we are waiting, hopefully, for the president's signature. So where do we stand with this, Alex, and how can this help our local business owners?
Sure. Thank you, Gina, and thank you for having me on today. This PPP Flexibility Act passed both the U.S. House and the U.S. Senate with pretty strong bipartisan support, and certainly with so many polarizing issues and highly partisan moments that just to see a bicameral bipartisan effort along these lines passed is I guess encouraging. The bill is, I believe, pending with the president, who has been expected to sign it, but I think we're still waiting on final word on that. So this legislation, I think generally is intended to respond to some concerns, some feedback that I'm sure many of us have either been providing or have been hearing from employers who had received PPP loans over 2 rounds of funding. There, approximately $660 or so billion in funds provided to PPP through the SBA and then through local lenders. And as I know this group has discussed, loans that may be forgiven. And obviously, how an employer qualifies for forgiveness is critically important. And this legislation is intended to make those standards, I think, a little easier to meet, and as the name of the legislation suggests or states outright, just to make it a little more flexible. The timing is important. Many recipients are coming towards the end or at the end of the 8-week forgiveness period. Well, this legislation extends part of it extends that 8-week provision up to 24 weeks. The original PPP also required employers to utilize at least 75% of the loan proceeds for payroll costs. This legislation would reduce that amount to 60%. So it's a 60-40 breakdown now between costs required, proceeds required to be used for payroll costs as opposed to other qualifying uses. So again, from 75% to 60%. On the in terms of the loans, PPP loans have a 5-year maturity. There were a number of concerns raised that the employers who qualify for forgiveness under PPP weren't able to utilize some of the payroll tax deferment options that have been made available. This legislation would allow employers to make use of both of those new provisions. So I guess that's kind of a general overview of how the House Bill 7010, which is pending final signature from the president, how it intends to help employers who are seeking PPP forgiveness or have otherwise been utilizing a PPP loan.
Great. I think that gives us a great high-level overview, and we're going to dig into that a bit because I know that Matt has certainly got a lot of questions about this piece and how it can certainly help the business owners that he coaches and works with. So Matt, tell us a little bit more. Alex mentioned this covered period. So tell us a little bit more about the covered period and what that does for the PPP loan.
Sure. Thanks for having me. Thank you everyone for joining our series. And I know I've seen most of you as consistent viewers and supporters of the series. Gina's done a great job with the help of Deb and Allison, and really applaud you guys for the hard work you're doing. You know, I've talked to quite a few business owners recently, and PPP is one of the top line conversation points. So this, you know, the changes that are about to be signed into law are great. You know, when you start to think about what the covered period is, the covered period is the term that's used for the 8 weeks after the receipt of the loan. Originally, that 8-week covered period was what you based your 75% full-time employee wages on. It's also that was also the period that your loan forgiveness was gauged on. The modification is that the bill now changes that terminology of the covered period to the earlier of 24 weeks from the receipt of the loan or December 31st of 2020. Again, the earlier of 24 weeks or December 31st. However, if you have done everything properly and you've done everything to meet the guidelines under the 8-week, the text of the bill says that you can still elect to use that period for the loan forgiveness. So those are the two big changes to the covered period.
Well, that sounds great and sounds like it will be very helpful, especially to those businesses who can't yet even open, right? Who may have qualified for a PPP loan, but their staff are not working. And I know I've talked to a lot of business owners who are very concerned about that. I'm bringing them back. My PPP is going to run out before my place of business even opens. So let's talk about that original loan had a 2-year repayment period. What has changed with this? And Alex mentioned that a little bit.
So with the 2-year repayment period, and there's a little bit of ambiguity to this, so I'm sure that there will be some clarification. It appears that any of the loans already received would still stay under the 2-year. However, any new PPP or SBA loan received under this would fall into a 5-year repayment period. I hope that they'll look into that 2-year repayment schedule for current, but as of right now, it looks like only new loans will fall into that 5-year period.
And that would be certainly a big thing as we move into our discussion today about cash management and cash flows. Certainly a 2-year repayment period versus a 5-year repayment period could really make a big difference when we've had no income and revenue over the last 3 months in some cases for businesses.
That's right.
Let's talk about the changes to the, so initially you had to spend 75% of your payroll costs of your PPP loan on payroll cost. What has changed with that percentage?
They lowered the hurdle. So you used to have 75% towards full-time employees and the payroll costs associated to them. Now that drops that hurdle down to 60%. Couple things that obviously does is allows a little bit more of the cash flow to be used towards fixed costs such as rent, mortgage, utilities, things like that. And it extends the period that you can functionally extends the period that you would be able to use that 60%, allowing for you to bring employees back at a later point in that cycle, or when your businesses are back open and fully or closer to full capacity.
It, however, does not change what you can spend that other 40% on, correct? So it's still
doesn't appear that way. You know, you're
okay.
still looking at mortgage, no new debt
Mm-hmm.
After the March, I think it's March 15th. But you can use it towards rent, utilities, anything associated to the fixed costs of the business.
Okay, great. So now let's get into Social Security tax deferral for employers. So I know, along with some of these bills, they've had some tax deferments and some other things as they relate to payroll taxes. And these have been a little tricky to read, I think, even from an accounting perspective. So maybe you can help us to unfold some of these things.
Yep. It seems like at the 30,000 foot level, one of the biggest things that changes now is that under the new bill, loans forgiven in their entirety or even partially are still going to be allowed the option of deferring the employer portion of Social Security taxes. So obviously we remember that in the original, there was some clarity. There was not clarity to who all could defer or how long they could defer. And now they've clarified some of how long you can defer the employer portion of taxes and made it clear that you can do it whether the loan was forgiven in its entirety or partially. So pretty much anyone that receives a loan can now defer that employer portion. Again, that's one of those that you should talk to your accountant now, not later, about, to make sure that your business is not hit with or saddled with a surprise tax bill or any issues later in relation to Social Security taxation. Great.
We're getting a question, and this is a question that I've gotten a couple times over probably the last few weeks. So the question is that the organization decided to use the employer retention credit, that's again a payroll tax credit, as opposed to the PPP when they initially had to choose one or the other. Now that they don't have to necessarily choose, or again, upon the president's approval, are there still PPP funds available? So if the organization wanted to reapply for PPP, should they consider doing that?
I'm going to tee this one up. I think, Alex, this may be something that fits your wheelhouse a little bit better. My understanding from what I was told is, yes, there are still funds available. Alex?
Yeah, I don't have specifics. I know the last time there's been reporting from SBA and Treasury that there were unexpended PPP dollars from the second round of funding. So I would say any employer who's interested really ought to reach out to their local lender and see what options are available.
I think I have Neil on the call. Neil, I'm going to unmute your phone because I know you can speak to this. Neil is with Community Bank, and he's been dealing extensively with these loans. So let me I think this number is Neil's. Neil, is that you? Can you?
Yes, I'm here.
Okay, great. I unmuted the right number. So can you answer that question as far as availability of PPP funding?
My understanding is that there are funds available. However, each individual lender may or may not be accepting new applications at this time.
Okay, great, thank you. So we appreciate that, and I think that that's kind of what we've been seeing across the board is that, sometimes it's not those PPP funds were extended, and it's a lot of onus on the banks to administer these funds. So that is why some of our banks have decided to only administer a certain amount, from what I understand. I hope that helped and answered that question that we have.
Yeah, I've talked to a couple of banks recently. There's and not to provide any false hope for anyone, but there's a push to provide for a automatic forgiveness for loans under a certain amount. And I forget exactly the breakdown, but I think I think maybe roughly 60% or so of the loans were for $100,000 or less. And I understand we have some folks from the banking community on the call today, but I think just from a purpose of administratively trying to make it easier, if you provide for automatic forgiveness for 60% of the loans, or if you increase that to 250,000, it's 80%. Just make that a little more smooth. I don't know the likelihood of something like that happening, but it is an active discussion, as I understand it, in Congress.
Great, thank you, Alex. It's always helpful to kind of know what they're up to, right, in Washington. We appreciate having you on the call and being able to provide those insights. And we're going to get into cash management while your business recovers, but I do hope that we'll have some more time to get additional updates from Alex as far as what's happening in Harrisburg as a general overview, and then also what's maybe happening in Washington with some legislation that's coming out as it might affect our small businesses. So Matt, let's move on and talk about cash management while the businesses recover and rebound from their shutdown. From what you've heard from business owners, what are some of the things that you're recommending or that you're talking about with your clients?
Yeah, I think one of the biggest aspects of our conversations has been around budgeting. We all, it's almost like we have to go back to business 101 and restart our budgetary process, looking at both sides of our balance sheet and saying, okay, what are all of my expenses? What are fixed? What are revolving? What on my expense side of my balance sheet creates a floor or a minimum? And then on the flip side, how are we going to adjust our income or revenue projections, at least in the short term, but more importantly, over the next 6 to 12 months. The biggest takeaway to the budgetary conversation is where we used to think about our budget on an annual basis and try to earmark or bucket over a 12-month period. That's really down to anywhere from a month to 2 months at a time. And revisiting our budget immediately is important, not just to find what's there and see what costs can be consolidated, modified, et cetera, but to build the left side of the balance sheet and the liabilities and say, here's what I have to do. And then unfortunately, it probably happens that we have to increase our costs, to meet that. One of the best things that I've seen some of the business owners do is they're putting in a line item in their budget for savings. In the past, it's been where some business owners will save a portion of whatever the profit is. But one of the things, especially now, is we have to rebuild our cash reserves, rebuild our credit or liability, is when you think about how much you need, put in a 1% or a 2% line item that would flow directly into cash reserves, a savings account, something that can support your business should October come around and all of a sudden there's a fear of going back out because it's getting colder and kids are in school and the spread starts to spike again, and we have revenue loss because people aren't coming back out. You'll have you'll have savings there to help bridge that time period that we would have. I think that's probably the best thing, shortening the time period of our budget and looking at it on a very detailed, shorter time frame, sometimes monthly.
I think that's a great idea. And we talked with nonprofits. I don't know how many of you were on that call on Monday, but we talked on Monday exactly about that point, really digging into what your budget looks like right now and what it looks like in 3 months and in 6 months, and how are you really setting yourself up to get through this, thinking about all of those costs. Let's talk a little bit about, and I think you alluded to this, but the cash management side of it, right? So there's a lot of pieces in the business world as far as who's paying with cash, and then it's right in your bank, but also who's paying with credit and who's paying with their debit cards and so on. So let's talk about that a little bit.
I think obviously we want to make transactions as easy as possible for our consumers, but we also have to make them as safe as we can. It's a great time to have a conversation with your banker. So regardless of what financial institution you use, take a couple minutes to call and talk to a representative and ask them if the cash flow, if your credit services, your merchant services, if all of your banking is set up properly for what's going to be your new normal. If you do decide to add a savings account for that bridge savings, do you have that account set up? Should you set up a new one? Have you looked into different, easier, touchless ways of transacting? Does your business take Venmo or Zelle? Does your merchant services make it easy to transact without having a card present because you want to have touchless? The idea here, the takeaway is call your bank, call your financial institution, take the 5, 10, even 15 minutes. You may be in a product that was great for you or a system that was great for you and your business 2 years ago, but it's changed. And financial institutions are going to continue to change with the growing needs of the consumer. So let's make sure that your business can transact in a way that makes it as easy as possible for that consumer to come back to you as well. The other thing is, when you're paying your bills, are you paying by check? Are we physically writing out checks still and mailing them? Or have we set up, are we using all of the electronic bill pay capabilities that your financial institution allows? Do you have bill pay? Do you have debited ACH? Are you able to take mobile check deposits? Are you able to transact in a way that can create more efficiencies for your business just by saving the time of having to go to the bank while still supporting the bank or financial institution that you're at?
I think those are all great tips, Matt. And I want to say that with the credit card processors, many of them offer different rates and different capabilities. So again, just be on top of that. You may be able to just call your credit card processor and negotiate some of those rates. If you signed up 2 years ago, your contract may have changed in that time. They may have different rates right now due to what's happening and kind of that push for online. So make those calls. We know sometimes as business owners that you get very busy in the day-to-day, but now is the time to really dig into those things that maybe you've put off for longer than you should have. Have you been having conversations about reserves with your clients, and what do those conversations look like?
Sure.
How-
And we mentioned reserves and finding a way to add 1 to 2%, potentially, which can help build up the backside of that. But other ways to help with the reserves is let's lower the expenditure side. So a couple of the things that you might want to look at doing is calling your bank or financial institution and discuss with them the current liabilities that you have. Interest rates have never been as low as they are. And, there's a lot of data to support that interest rates are going to remain low for a 3 to 5 year period, which allows you a refinance or consolidation opportunity for debts and costs that your business may have before this pandemic, but also for costs incurred now. Not that we want to spread and take from revenue down the road, but cash flow over the next 6 months is going to be important. So if you need to stretch your repayment, it's a good time for you to call and talk to your commercial banker. A couple of the things that you want to talk to them about, 3 things in particular, and the 3 words that you want to just talk to them about. Loan modification. Loan modification would just mean that in most cases, they're going to make a change to the interest rate or to the term that you would pay. Either of those are likely going to decrease the monthly cost for debt service that you have. Second one would be consolidation. Talk to your bank about, given current interest rates, is there an opportunity for us to consolidate any of our debts or liabilities, credit opportunities that we may have that are at a higher interest rate. And then the third is obviously a basic refinance. We're familiar with the term of refinance because we typically use that when interest rates drop, we refinance our house. There's no reason that you can't discuss with your commercial bankers, loan officers about any of those 3. I know banks are being supportive. I've seen it, I've discussed it with bankers. So if that's going to help your business, they're going to do everything in their power to make sure that the loans, the cash flow that you need is as cost effective as possible.
Great. I think that's all very helpful, and I think leaving them with those three things to discuss, 4 things really to discuss with their banker, right? That loan modification, consolidation, refinance, and then again, what are your terms of your payment processing, right? So what do those things look like with your bank? I think leaving them with those things is a great place to kind of wrap up this conversation. We have some questions coming in, and I'm going to unmute Neil again because they are pretty specific, I think. But I'm also going to mention that our next phase, so our rebuild phase, we're looking at a series of workshops. So we're going to give you a tool, something like an Excel spreadsheet that'll say, this is something that other businesses are using for tracking their PPP. This is exactly what they're doing, and this is how you plug in and fill out this spreadsheet, right? So we'll give you that tool on a Monday. Wednesday, we'll have a discussion about some businesses and some things that are changing in our community and businesses that have rebounded well and that are rebuilding well. And then Friday, we'll dig into that tool a little more and answer your questions. So we've given you a week, Monday through Friday, to kind of look at that tool, process what we said on Monday, utilize the tool, because we'll email it out to all of you, utilize that tool, and then hopefully come back on Friday with some of those questions. So I say that in preference to the questions that we do have in our chat right now, but let me unmute Neil. And first of all, it says, do current loan recipients for the PPP need to apply to their bank to extend the deadline? Again, because this legislation hasn't passed, there's no way to apply. I don't know if we even know if that will be the case, if they'll need to apply or if this will just be a blanket, all the loans will have that extension. Do we know that? Neil or Alex? do you have any feeling as to whether current loan recipients would need to reapply to meet the extended deadlines or qualify for the extended 24 weeks as opposed to that 8 weeks covered period?
Well, my impression was that that wouldn't be the case. I'd want to dig into the text of the legislation to confirm, but based on sort of the messaging around it, it seemed that that would be a sort of universally applied new standard for determining forgiveness eligibility.
Okay, great. And that was kind of what I thought, but I'm never sure, and we're never sure really until the bill passes, right? And then they start setting the policies around that bill.
Yeah, I mean the version that is posted now is the final version that the president can either sign or veto, and again I think he's widely expected to sign it. So definitely want to double check, but again based on what we're hearing, it does not sound like they're expecting loan recipients to have to take that action to avail themselves of the provisions of the PPP Flexibility Act.
Okay. And the only thing that wouldn't right now that wouldn't automatically transfer is that repayment period. That repayment period right now, as the legislation is written, is only extended for new loans under PPP. Is that correct from your understanding, Matt, Alex? Okay. All right, good. And then, so the next question is really why I went into talking about our workshops for our Rebuild series, and that is, are there detailed requirements specified as to what is needed for forgiveness documentation? Utility bills, how many, what time period? So that's where we'll get into really looking at a tool that will kind of break down okay, if my loan was for, we'll just use 100,000. If my loan was for 100,000, we need to look at 60% of that under the new rules to say if we need to spend 60% on payroll, the other 40,000 can be spent on utilities and such, and kind of recording that, but also keeping that documentation with those records. Again, we have been recommending from the very beginning of this that you put those PPP funds in a separate banking account. When you do that, then everything that comes out of that banking account should be for PPP, and you should keep documentation of all of those funds until they're completely expended, but also be tracking them on that either 75-25 or 60-40. Right now, again, the 75-25, and then hopefully with this legislation passed, the 60-40. Does that make sense to everyone? Does that answer the question? Is what I just said kind of in alignment with Matt, Alex, Neil, what you've been recommending?
It is.
Yes.
Gina, I pulled up the chat box and just rereading the last question, and I think if they're focusing on and Matt and Neil, correct me if they're a current loan recipient, so we're not talking prospective, but again I'd want to double check. There may be a requirement for current loan recipients to elect for the 24-week option. Loan recipients, I would think that are eligible for forgiveness based on the 8-week requirement, should probably when they can apply for forgiveness, but I think that there may be different requirements whether you're planning to apply or are a current loan recipient.
Yeah, and that makes sense, Alex. So if you already have your money and it's sitting in the bank, you want to follow the current legislation that's out there right now, and be prepared that at that 8-week mark, you're ready to go. Because again, as we talked about, that 8-week mark for many of you is coming up pretty quickly.
Right.
So you want to be, you want to have your documentation all separated and ready to go under the current legislation.
But forgive me for not having a more detailed understanding of this legislation I'm supposed to be talking about. But I do think they intended for it to provide flexibility to existing loan holders as well. So that may be just something, if you're in that position, to discuss with your lender and maybe dig into a little more of what, if any, steps you have to take to utilize the flexibility that's added for for existing loan recipients. So I apologize that kind of little mixed up there.
No problem. I think that I think we've given our disclaimer several times throughout our series that this is changing daily, and we can give you the best information as we have it right now. But again, the legislation has come out really quickly, and thank goodness it has been passing fairly quickly. So it's hard to stay on top of it all.
It's so much nicer when it's a hard-fought, battle slog through, and they have weeks and weeks of fighting it out, so that we have weeks and weeks to wrap our heads around it. When they just agree, it's so boring and quick. We're left behind. But just kidding.
I think he's being sarcastic. For those of you who didn't pick up on that, right? Neil, do you have anything you'd like to add?
Just to try to keep documentation as best as everyone can. It'll be important to have, not only to ask for the forgiveness, but then if down the road anyone ever needed to look at it, that there's a file, that whatever documentation was included in part of this process that you have to refer back to, just in case. And there's going to be, as Matt and Alex has said, there's going to be some continued changes and clarity, hopefully, that's brought in the next few business days. We haven't been given any indication that an existing loan recipient has to apply for any changes related to this new act, the 8-week versus the 24-week. But again, the details are still have to be sorted through.
Very good. I think someone's got a hand raised. You can go ahead and unmute yourself. I'm trying to
It's
find
Richard.
you. Okay.
Good morning, everyone. One of the things in relationship to what Matt was mentioning, the SBA also is offering on any new 7A 504 microloans that are taking out, they have a 6-month deferral on the first 6 payments after successfully getting the loan. The only problem with that in consolidating or refinancing any of your existing debt, most of the banks are so busy with PPPs. I know my national lender is not taking any new SBA loans until after July 17th. And that date might move out depending on how many more PPPs they have to worry about. But that's a great tool. The interest is generally a little bit higher, 6 points over the LIDL rate, but it also offers somebody that might not be able to refinance, the ability to refinance under SBA's programs and still utilize that 6-month deferral and forgiveness on those first payments. So it's a good tool if that's.
Yeah, that sounds like a good tool for those that are still, again, kind of struggling with where's the cash going to come from to get us restarted.
Especially the ones that didn't qualify for EIDL.
Right.
and are looking for alternative methods of consolidation or lending or bridge capital.
Very good. Thank you, Richard. I appreciate you pointing that out to us. We are at 9:54 right now. Alex, I know that we do have a call with your boss and the chambers from across the state right at 10. So is there anything pressing that you want to share with my group right now? I know we get you on these calls periodically, and hopefully we can have you on in the next couple of weeks as well.
Sure, just very high level from the state legislature last week. The legislature passed and the governor signed a 5-month budget that will take us through November of this year. It was sort of agreed to all around House, Senate, Republican, Democrat, and administration that they simply did not have a comprehensive enough understanding of where finances will be through the entire 2020-2021 fiscal year to make decisions for the entire 12-month period. So a 5-month kind of stopgap or continuing resolution type budget, which level funds all areas of state government. The exception being school districts did receive their full 12-month funding, I think, in order to allow them to plan accordingly. So that budget and most of the related code bills, which direct the agencies how to spend those dollars more specifically, those were all passed, with broad support and signed. The one exception was one of the code bills that included a number of provisions, one of which would have prevented the administration from revoking licenses for businesses based on circumstances surrounding emergency, the emergency declaration. So, we remember a few weeks ago when some counties were talking about deviating from the governor's order, and governor kind of threatened to pull licenses from businesses if they went with their counties as opposed to the state. Legislature responded, trying to prohibit that. Governor vetoed. So that was one bit of disagreement in an otherwise pretty smooth budget process, all things considered, from last week. So what is typically a very hectic June for any of us involved in the state budget, that chaos gets postponed until November. Hopefully by then, we will be well into a robust economic recovery at that time, and we will see how that plays out. But I did want to mention briefly the update on the state budget.
Oh, that's great. I appreciate you taking the time to do that. I think it's really important for us to remember and to also know that our schools are fully funded. I know that was a huge relief to our local superintendents. I did speak with them and our state rep last week. We have a weekly call with them. So they were very happy that happened. And I know there's also some funding in there for counties and PPE and some things like that our EMA was very thankful for as well.
Correct. In addition to the state budget, they also passed legislation allocating billions really in federal emergency response funding. So that it was a busy Thursday last week. Yep.
Yeah. Yep. And we're very thankful for all the work that the PA Chamber does. Matt and Alex, thank you so much for being on the call today and talking about PPP flexibility. Again, everyone, we are continuing to dig into this. Our next part of our series will have you rolling up your sleeves and digging into some of this with us and doing some workshops that will hopefully be beneficial to you and to help you kind of unfold what it looks like specifically to your business and how you can move forward and successfully rebuild from this time off. Again, thank you to Matt and Alex for being on the call today. Thank you everyone for joining us, and we look forward to seeing you Monday on our Restart, Rebound, Rebuild series. Have a good day, everyone.
Thanks.
Thank you.